This is my biggest income month ever. My portfolio generated over $8,500 in dividends and distributions this month, including SCHD's quarterly payment. But what surprised me wasn't just the amount. It was which ETFs produced the most income, which ones kept growing, and where I'm reinvesting every dollar. Let's open the portfolio and look at the numbers. Welcome back to Simply Money. Each month, I share my actual income portfolio results, not hypothetical examples, but the real income my ETFs generated and how the portfolio continues to evolve. This month was a milestone. My portfolio produced more than $8,500 in income, making it my highest month yet. I'm going to break down exactly where that income came from, look at SCHD's latest quarterly dividend, review how each position performed, discuss any changes I've made to the portfolio, and talk about where I'm reinvesting distributions going forward. Whether you're building toward your first $500 a month or working toward replacing your paycheck, I hope these real-world updates give you ideas and show what's possible over time. Let's jump into the portfolio. For those that are new to Simply Money, thank you for joining us. In this series, what I do is I show my income portfolio. I don't touch my growth stuff. I leave that off to the side, but I show you what is happening with the income portfolio, what it's generating, how I'm reinvesting, and how it's grown. And what we're going to be showing here is the dividend growth Simply Money spreadsheet. These are available down below in the description at the Buy Me a Coffee link. I'm going to start out with SCHD. For those who have not seen this before, I want to give it a little bit of an overview because it is a quarterly payer. And because this is a quarterly payment, we're getting a bigger payment this month, and that is due to SCHD. I want to show the power of what SCHD has done. And now this is my portfolio. In 2017, I was able to roll over this $200,000 into the fund, and this is a split adjusted price that I paid $15.10. Down here, you can see as I've reinvested every distribution, you can see the dividend payment, $1,400 each quarter. And it went up to $1,500, got up to $1,800. But as we come down, I want to show you where it is now. This payment at $3,000. Now you can see here that there are some payments that were much higher, but last summer I started doing some shifting because SCHD was getting very heavy, and I wanted to keep my allocations and split that up a little bit. So we did sell out of some of that, not a whole lot, but just a little bit to bring the allocation down. You can see the sells that we did at the various times, these amounts here. But even after that, with the new share count that we have, and continuing to reinvest, you can see that our quarterly payments are right at $3,000. That's $1,000 a month that this is producing, and it's growing month over month, quarter over quarter, and we will continue to hopefully see that go up. This latest payment was 25 cents, and we hope to see September and December continue to drive that yield on cost going up and the yield growth, the CAGR growing. You can see that even after selling out of some of this position, what we are up here about $176,000. The current value of this position is right here based on today's price and the current value. And that is what that's producing. And I know a lot of people, they either love SCHD or they hate it. Some people are like, you're not getting hardly any yield off of that. But for me, and you have to make your own decision. So remember, this is not financial advice. This is for informational and educational purposes only. I do this because it provides me a hedge. It also grows my dividend. So my income is growing. And when I get ready to use that in retirement, I want to see that cost of living going up and seeing my compounding continuing as my income is able to grow. I want to show you back here and why being in the stock market can be very scary and why you have to have a little bit of patience. You just have to be able to ride out some of the ups and downs. The stock market is not linear. If something says you'll get 8% return, you're not going to get 8% every year. You might get 20% one year, but you might also get negative 10%. Now, I want to show you right here, 2019, we got up to $278,000. And that was some nice growth in 2 years from where we had begun. But you can see when COVID hit at the beginning of 2020, how it dropped down to $222,000. That's a $56,000 drop in a matter of months. And that can be very scary. And people, a lot of times at this point, whether it's with SCHD or another fund, they start panicking, they get fearful, and they sell out. And that's the worst time to sell because you're selling at a discount. You're locking in those losses. A lot of people will be like, yeah, you lost $56,000. And I always say I did not lose a penny because I never sold anything. In fact, when I got this distribution here, I was able to buy more shares. You can see the December, I bought 116 shares, but because of the discount, I bought 139 shares that month. And then even in September, I got up to 144 shares I was able to add because I was getting that at discounts. And you can look here in September, we got back up basically where we had dropped from, back to 275. And then by December, so 6 months, 9 months later, we were up to 320,000. So we went 3 months where we dropped 56,000, but 9 months later, we were up 50,000 from the original. And then look at that. It continued and we got up to $411,000. And that is how the market will work. And you see 2022, we had a down market. It dropped again, got down to 356 from the high of 411. But 356 from that high of 411 is still only 2 years later, 130,000 higher than what we were worried about before. So you can see as it begins to drop and you continue to hold, you recover. And I wanted to highlight that this month. Again, for those who are maybe struggling with seeing market fluctuation and seeing their funds drop, that is part of it. And when you stay the course, you'll see that continue to compound and you'll see that massive growth. And then right before selling, you can see it got up to 483 here, and now we're down a little, obviously, because we sold out of almost 6,000 shares of that. But still doing very well. Got the quarterly payment of $3,000. It hasn't gone through yet as of this recording. That is the declaration and what we will get on the payday, which will be a couple days from when I'm recording. But I did want to get this out, so we don't know exactly what we'll buy in at on that date, but that'll update. It'll be right around the same price. It's not going to fluctuate that much, but you can see our gain there. I want to show you one of the newer funds that you haven't seen a lot of. This is a twice a week payer. It pays every Tuesday and Thursday. Basically, sometimes it fluctuates a day or two, but it pays 2 times a week. The share price has not fluctuated a whole lot. QLDY has been very consistent. If you look at the dividends, it's paying out anywhere from 19 cents up here, got down a little bit into the 17, 16 cent range here. And again, now it's back up to the 17, 18 cent range. It has averaged right at 17 cents. Since we've been in it from November, we've been getting that consistently twice a week, right at $38 to $40, and we get that every week. So about $80 a week off of that $10,000 investment. So if that investment goes in, it's just pumping out about $40 twice a week. And you can see the latest payment right at $45 with the dividends reinvested. We're up about $1,400. Not a huge gain, but it's really building a nice income stream for us. So we'll look at that. And hang on, because what we're going to look at, for those that haven't seen this, we're going to look at each of these funds individually, but then we're going to look at a snapshot of what everything paid for the month and look at that and kind of look at the trajectory of how things have been growing month over month. So you want to stay tuned for that. Here's the big surprise. Do not turn. This is the big surprise. Most of you that watch the channel are not going to be surprised by this. CHPY has just been on a tear. We got in it in September, bought a little bit more in December and January, but just been reinvesting those distributions. You can see the dividend payments. You were 150, got up to about 200. And the latest payment we got, the biggest CHPY payment we've had, will be paid out tomorrow, $500. The largest payment, and that's a weekly payment off of about a $20,000 investment that is now valued up around $50,000 because it continues to compound and grow. Not only is it paying a very large yield, the appreciation has been out of this world. This is a ETF that is made up of about 30 semiconductor companies. So it's not following one company. They're selling call options on those, but it has a basket of companies, but it's in a sector that I felt very strongly about because semiconductors are really important in the AI industry and everything going on there. Those that know the channel, you know there's a small position in the growth fund that's in SOXX, and that is just semiconductors, and it's the growth-oriented portion. And this is the income-oriented position, and it's generating that income. And I know even people will say, well, what if your income drops? Even if my income cut in half off of this, I'm still looking at $250 a week. You're looking at $1,000 a month off of a $20,000 investment that it's producing, and that's with a 50% cut. And it won't sustain that. It may drop for a while in a bear market, and then you won't get all of the upside, but you're still generating that income, and it's doing its job. It's throwing out that income. And we'll look at what it's done on the final sheet here in a minute. This is a monthly payer, IWMI. This is a small caps company ETF made up of small cap companies, and it is a monthly payer, and it has been paying very consistently between 59 cents here, and it's got up to 63 cents on this latest one in June, and it's been just continuing to grow, and the share price has gone up slightly from $48 to $52. So not only are you getting a nice healthy dividend, you're also getting some appreciation, and you can see that position, we're up about 14% since we got in it in September. Then we have a little JEPQ, GPIQ. We're not going to be looking at those today. I haven't updated these yet, but there's just small positions in those. I will show you what the income from those have been, and because that's really what's important. I want to show you now QQQI. This is another monthly payer following QQQ, selling call options on that. You can see the buy-in back in July of last year. So been in it about a year. You can see the great growth this has had, up about $11,000 just on this small position, and seeing those dividends paying out over $800 a month now coming from that. Again, just been not only growing the distribution, but the share price has gone up some as well. So you're getting that appreciation on top of it. And likewise, SPYI has been doing the same thing. Appreciation hasn't been quite as much, it's had a little fluctuation, but it's up about $3 since last year. But you're also getting that nice distribution month over month, and those have been paying out. So this is the last time you will see ULTI. We're done with this one. We will be transferring this. We're going to be looking at some AGI, some GUI, some AMDY, kind of taking this and splitting it into those funds, and a little OVL is going to be in there. We're going to put a little of those different ETFs in there, replacing this. This has been the 1-year experiment that I promised you. You can see it has had its ups and downs. It is paid, and people will look at it and say, oh, I can't believe you're giving that up. Look at these payments, $300-something each week, week over week. It dropped down into the low 200s, and it's been in the 200s ever since then. It's starting to climb up a little bit. It's around 270 now. But here's the thing. 1 year, it doesn't matter that I'm getting these payments week over week, and I'm reinvesting them. This is what we look at. Total return, -5. So a year's worth of reinvesting, yes, it feels good. You get that paycheck every week, but if I'm not using it, and I would be in a whole lot worse condition if I had been using that income. And some people will be like, well, take the income and invest it somewhere else. And if that's what you want to do, you want to redirect your income, that is a possibility. And we actually have a spreadsheet that we use on that, the Simply Money Portfolio Planner. If you've never seen that, when you use that, you can come over here to the Forecast Pro. And if, say, you had these different companies, you can redirect your income and use that. This portfolio planner helps you decide, okay, I'm going to put all of my CHPY income into SCHD, or I'm going to put all of my ULTI income into CHPY. Whatever you want to do, you can redirect it, and it shows you where to redirect it here. This is a great planner for those that are looking for something to help plan out some of their portfolio. But ULTI, it has been an up and down battle, been a long haul, been debating about it, but I committed to that 1 year, and so this is your last update. So let's bring that over to the income portfolio. So here you can see each of the positions. You can see the number of shares that are in each of those. You can see what the current price is as of today, right now, which is the 24th of June. And you can see what the annual dividend is based on the trailing 12 months. And for those that are declining, we adjust that so it factors in forward that same decline to make sure you're not overestimating your annual income. Your monthly income, which would average about $5,500 a month. You can see your total portfolio balance here on the income portion is about $619. So this is just a snapshot of what I do week to week, month to month, just entering it in there. But the one I really want to show you is the one we track. And this is, I don't sell this one. This is just me throwing in the numbers, and it's super easy. I put the date, what ticker it is, and how much it paid. And this is what I track. This is my favorite sheet because this is showing me on June 1st, I got QLDY, $40. On June 3rd, I got JEPQ, $205. And ULTI, $271. CHPY, $447. Now, again, I am reinvesting. Most of this is dripping back in. Some of it I redistribute here and there. But I want to show you a couple things. First week, $1,100. Second week, $700. Third week, $2,800. And then this week, and there's still going to be 2 more QLDYs that'll be added here. So add maybe $80 to this. So we'll just say $3,900 for this last week. And that's because of SCHD's $3,000, which is quarterly. That won't be in every month. And I'll show you the trajectory in a minute. But what I really want you to see is 2 things. It's total, when you add in the couple QLDYs that will come in the next couple days, puts us over $8,500. But look at the each fund total. QQQI paid $900. SPYI, $835. IWMI, which is just a small allocation, $200. CHPY, this one here, look at that, $1,800. And that is with also having about a 40% price appreciation on top of paying that out. It has just been a great year for CHPY. SCHD, $3,000. JEPQ, $200. QLDY, that $10,000 position. And again, we have to add about $80 to this because it hasn't put in the last 2 for the month. So you're looking at about $360 being made per month off of a $10,000 investment. That is really, really strong. Last month we got out of blocks. I'm going to leave that here because I'm going to change that to like Eggy or one of those others we're going to be adding. GPIC, we have $150. And here's where people get confused. They're like, ULTI, I can't believe you're getting out of that. Look, it paid $1,000 this month. Yes, but I had to reinvest it and still at a loss. So if you use the Simply Money drip score sheet, you can look, if you came to ULTI right here, doesn't matter what it's paying. With a full drip, you're down -4%. And this is from about August of last year. It changes slightly depending what date you put in it. But even if I took the cash, we would have been down 4% total return, meaning your portfolio would have been way down. Even after taking the cash and reinvesting it, you're down. But if you take the cash, your portfolio balance is dropping more and more and more. And that's why the ULTI gets a caution on the reinvesting opportunity rank. And I would just caution against it. I've done this experiment for you, so you don't have to. But the dividend tracker, we look at that and you say, wow, I just can't give up $1,000 a month. I'm just telling you, there's better ways to make $1,000 a month that's not eating at your capital. That is each week and each fund's payment. This is where it gets good. Let's look at the cumulative right here. This is last year, and this is 2016 so far. Last year, you're looking about $40,000. This year, we're already at $36,000, and that's after 6 months. You can see the trajectory, and those that have followed the channel, you understand what happened. We had SCHD. Remember, we sold out some position, but it used to pay really, really big. But then each quarter, between the quarters, we didn't get much payment because we didn't have a lot of income focus at that point. But because we're dollar cost averaging and transferring over slowly, preparing for retirement a few years out, making that adjustment instead of doing it all at once. We're slowly sliding that over. You can see in July, August, as we started making that shift, the quarterly didn't jump as much because SCHD had come down, but these in-between quarters started going up. And right here in January, we actually made more in a non-quarterly month that SCHD did not pay than we had back in March when SCHD did pay. That was our first non-quarterly month that outpaced one of the SCHD months. And then look at what our quarterlies are doing now. We were really excited back in December with the 7,600, and now we're going to be up over 8,500. And you can see that trajectory going up. But look at these in-between quarters. These quarterlies are great, 7,600, 7,200, 8,500, but look at this, 5,200, 4,200, 5,500, 5,400. That is the month to month what we're getting now. Instead of having to wait quarterly for some decent payments, now we're getting those decent payments every month and then these huge quarterly payments, and it's just going up. And so as we prepare for that retirement, we're going to see that just continue to increase. And the goal is to not only take out distributions and not sell shares, but also have extra distribution to reinvest and continue to build that fund and increase the cost of living and ability spending money. So we're tracking that year over year. You can see average last month, 3,351. So far, average this month, 6,000, almost doubled what we're averaging per month, and we're looking forward to seeing what the second half of the year is. So that's the monthly update. What are your thoughts? Anything you like, anything you're concerned about? Share those down in the comments below. I appreciate you watching. I always enjoy sharing this and getting your feedback. I'm looking forward to next month because we have added OVL, we've added EGI, we're going to be adding GUI and AMDY, and then we added that small position in the quantum computing and WQTM. Now that's in the growth portion, but I may keep you updated on that one because that I think is going to be a really exciting opportunity. It's going to be very volatile, so you'll have to watch that as well. But that's it for this month. Thank you for joining me as always. Don't forget to hit that like and subscribe button, and we'll see you next time on Simply Money.